All right, thank you everybody for coming today. My name is Sean Thompson, Director of Investor Relations for Atlantic Gold Corporation. On this opening slide, I'd like to draw your attention to the headline, Lowest Cost Gold Producer in the Sector. This is something that we're very proud of as a company. We've worked very hard to achieve, and we remain very focused on maintaining going forward. Please note, we will be making forward-looking statements throughout this presentation. I'd like to begin with what we call our key differentiators. This is what really sets us apart from our peers in the gold space. First point being shareholder alignment. Board and management own in excess of 35% of the company. Yes, we're aligned with shareholders. Yes, we have skin in the game. Track record, this will be the third gold company Chairman and CEO Stephen Dean was part of building. He's held senior roles at Teck and Normandy Mining, which was Australia's largest gold miner until being acquired by Newmont in 2002. President and COO Maurice Bélanger also comes from the big end of town, having held senior positions at Kinross and Gold Corp. Maurice has been really instrumental in helping us attract some of the best technical people in the world to Atlantic Gold. Analysts and investors that have been to site will tell you this mine shows like a senior company asset. Risk management, we executed a fixed price contract on construction, which resulted in a plant being built on time and on budget. Not only continues to perform well, but is actually exceeding our design criteria. We implement grade control drilling to help us better delineate ore from waste. Time is money. As large shareholders, we execute fast. The gold sector frequently writes off holding costs, salaries, overheads every year. This is not good for shareholders. We've gone from concept to commercial production in just over 4 years' time. We are the lowest decile for both cash and all-in sustaining costs. We've got an expansion plan to boost production up over 200,000 ounces a year, essentially doubling our production. And we've got considerable upside with what we call our string of pearls deposit strategy along the 45-kilometer untested host structure. We are located in Nova Scotia, Canada, about 45 minutes from the Halifax International Airport. You can have a pizza delivered to site. Our staff drives in and out. They get to go home, have dinner with their families after work. You can have parts and supplies delivered with a phone call within 2 hours. So there's considerable location and cost advantages for us here. This is what we call our four-phase approach. Phase one, we declared commercial production March of 2018. We delivered on our full year 2018 production guidance, actually coming in beyond the higher end of that range, just over 90,000 ounces. Our cost guidance as of the third quarter 2018 was also in line. Our all-in sustaining costs, 726 Canadian per ounce. That's US $544 per ounce at today's exchange rates for the preceding 3 quarters. Just released our 2019 guidance. That's 92 to 98,000 ounces at, again, low all-in sustaining costs of Canadian 695 to 755, which is US 521 to 566 an ounce at today's exchange rates. The fourth quarter financials and full year financials will be released March 5th. The Phase 2 expansion is integrating an additional 2 satellite deposits, 15 Mile Stream and Cochran Hill, into the life of mine plan, boosting gold production up over 200,000 ounces a year, essentially doubling our production. That was announced January of last year. It's about a year old now. Phase 3 was really growing and expanding those resources at 15 Mile Stream and Cochran Hill, and we will have an updated resource reserve estimate and an updated life of mine plan this quarter. Phase 4 exploration, what we're calling our corridor regional program, we're going to be drilling up to 100,000 meters along the plus 45-kilometer untested host structure that currently hosts all 4 of our deposits. 2018 production highlights. Head grade was in line with life mine reserve grade. We're finding good resource model to production reconciliation, gold recoveries of 95%, and again, we finished the year beyond the upper end of our full year's guidance for 2018. We're strengthening the balance sheet, we're growing our cash, we're reducing our debt, we've got strong operating cash flow. We are very profitable, we're making a considerable amount of cash flow on a monthly basis. Quick look at our share structure, and I'd like to highlight that in September of last year, we refinanced our debt facility with a $150 million revolving credit facility. We've got a clean balance sheet now, net debt of about $60 million, total cash of $45 million. In this volatile gold price environment, we're able to mitigate the gold price risk. Canadian dollar gold price has been less volatile than the US dollar gold price. In fact, it's only a couple $100 off of its highs back in 2011. We've got a hedge facility on a small portion of our future gold production at Canadian 1550 as well. As I mentioned, we are the sector's lowest cost gold producer. This is Atlantic Gold on the far right versus our junior and intermediate producer peers. The seniors would also be on this graphic, but it was just getting too busy, and they're off to the far left anyway. The question really is, what makes us the lowest cost producer? It's not any one thing, it's a combination of several things: location, grade, excellent recovery, low strip ratio, a favorable Canadian dollar exchange rate, and of course, what our president and COO likes to remind me of, a good team that has delivered this. The Phase 2 expansion comes from the 15-mile stream and Cochran Hill deposits. As you'll see on this map, all deposits are within trucking distance of the central processing facility at Touquoy. 15-mile stream and Cochran Hill will be pre-concentration facilities, and the concentrate itself will be trucked to Touquoy, where the central processing facility is. This is the life of mine plan as of January 2018, so almost a year old. This is based on resources drilled to July 2017 at 15-mile stream and Cochran Hill. We've since drilled 100,000 meters in order to backfill those arrows you see to the right of the graphic. And again, we'll be updating the resource reserve and this life of mine plan this quarter. Phase 3 expansion was targeting extensions to 15-mile stream and Cochran Hill. I'd also like to highlight that we drilled to the south of the current pit at Touquoy, where we're currently mining, hit mineralization in line with expectations, showing good continuity of grade within the disseminated mineralization in the argillites. This is 15-mile stream. That orange outline is the resource as of July 2017, resulting in the life of mine plan in the top right corner. We've done expansion drilling at Hudson and Plenty. We've done further drilling at Egerton-McLean throughout 2018 as well. Cochran Hill, similar thing, orange outline being the resources of July 2017. We discovered a robust zone of mineralization at Cochran Hill below the previous pit design, showing high-grade intercepts. The deposit's still open to the east. We see really good potential here to expand this resource. We actually put out news this morning showing high-grade intercepts from Cochran Hill. Just for example, we hit 7 meters of over 10 grams, 23 meters of 3 grams. This is what really gets us excited. The Corridor Regional Program, our exploration, we're going to be drilling up to 100,000 meters along this corridor. In fact, the first discovery on this corridor is what we call the 149 deposit. It is about a kilometer from 15-mile stream. We hit shallow mineralization there along a 350-meter strike. That's now been extended to almost 475 meters in strike and open to the east. Theoretically, you could fit 50 Touquoys along this belt. We think there's a good chance we identify at least 4 over the next couple of years. Long-term strategy, we're either going to grow and become like our senior producer peers, Oceana Gold, B2 Gold as examples, using Moose River as our cash engine, or we'll be acquired at a premium, whatever receives the highest return to our shareholders. Upcoming catalysts, just to wrap up, full year 2018 financial results will be out March 5th, updated resource reserve estimate and life of mine estimate. Q1, that's going to incorporate Phase 3 resource expansion drill results, plus additional 2018 drilling at Cochran Hill, 15-mile stream, 149 deposit, and Touquoy. Drill results from the Corridor Regional Program will be ongoing throughout 2018. That's it for me. Thank you very much.